Welcome to Private Equity Profits. Clifford Locks is a certified board of director, a trusted confidant to CEOs, C-level exec, and high-potential employees to help them clarify goals, unlock their potential, and create actionable strategic plans. Seth Green is the nation's foremost authority on growing your portfolio companies with direct response marketing. He is the founder of the direct response marketing firm Market Domination LLC, and he is an 8-time best-selling author who has been interviewed on NBC, CBS, Forbes Inc., CBS Money Watch, and many more. Cliff and Seth interview top players in the financial sector, focusing on private equity firms, venture capital companies, and family offices, discussing developments and trends shaping the industry. These experts will share with you how they've grown their businesses and increased profit, and how you can too. And now, here's your host, Cliff Locks.
So it's all about mitigating risk. And pulling it back to my example right there is, what are those industries that are necessities? Right? Multifamily, for example, today, there's a shortage of housing. You have the millennial generation swooping through. You have boomers or seniors in retirement, potentially downsizing and looking for affordability. So like that is just one. Multifamily we like, right? Because it's a necessity. The supply demand fundamentals make sense. And then, there's other layers in terms of, we just don't like any multifamily. Then you have to go into the price per square foot and the rent and the affordability. But those are staples, healthcare, multifamily, even oil and gas today we're pretty bullish on. But we're all about mitigating risk and downside protection and creating a balanced portfolio.
So cash flow plays a major role for you at this point. You're funding your deals where they make the cash flow is actually going to allow this to happen. You're not waiting for an exit to make the profit.
Correct.
Okay.
Correct. Yeah.
No, I was going to say you have a conservative view and you're going to have a very handsome exit later on, but everything works financially through your purchasing on the front end.
Yeah. So we are investors are accredited or high net worth, and most of our clients have made their money, whether it be in real estate or whatever their business is. And today they're looking to reduce volatility.
Excellent.
And create more stable, predictable, tax efficient income. They don't need to hit home runs anymore, right? And so they're looking for stabilized, defensive, resilient investment strategies that provide that, 4, 5, 6, 7, 8%, annual income stream. Some don't have appreciation at the end. Some of them do. But that is just the market that we're in today. And I tell all the clients, look, if you're looking for monster returns, we're not your shop.
Okay.
We just don't view the world. The additional risk you're taking on to potentially get that additional return, it just doesn't line up today.
That brings me to my next question. Are there alternative investments a safe bet, or are they high risk and high reward?
Sure. Yeah. All investments carry risk, right? And we don't blow smoke. We don't say, look, anything's a guarantee. But again, I would argue, and you'll see lots of publications in the market more and more today, and I've seen this industry evolve. There are some big players out there, including the endowments and the institutional world, that are moving to a 40% alternative investment allocation. So the old traditional model of 60-40, stocks and bonds, cash, we saw that break really in 2009. It did not work. And today, I'm getting off track. So yes, the alternative investments, there is a real place for them. There's a need for them. There's a variety. There's hundreds of different opportunities out there. We feel that the offerings that we bring to the table, because we know the syndicators and the operators so well, and we know those strategies so well, we have a very high comfort level with the opportunities that we provide.
So let's move into what is the trending in alternative investments right now?
Why kind of the trend?
Well, in other words, when you look at the growth that's taking place, you have funds coming in from overseas, BlackRock and other major players going into multifamily. So it's competitive. But you've picked out a niche where you're really looking for returns that are very consistent for your investors. They can count on it. So it's risk weighted in their favor to have a positive outcome. So I'm looking at, what does the trend look like? In other words, let's just assume we're going to probably, the economy is probably not going to continue to move, in the same level it has with the stock market at this point. I think they really have created some challenges when it comes to the energy. We were sort of self-reliant. We were exporting. I see that's collapsing at this point. We're at about $150 per barrel. Reports being published, we could go to $10 a gallon for gasoline. I'm looking at diesel fuel at $6.50 a gallon. I mean, that's not really sustainable. So I'm interested in your feelings. What's the trend at this point, for your clients?
Yeah, absolutely. And it's a great question. And it's part of the reasons why I'm so excited to have been in this industry and to be in it today, because the trend in the alternative space is going to continue for many, many years to come. And I've seen, again, this evolve. More and more financial advisors, registered investment advisors, clients are now in tune or becoming aware of this other basket of, alternative investments. There just hasn't been a lot of education in the market. It's been a sector really that the institutions, the endowments, the big boys have benefited from. And really the retail investor hasn't participated. But they're waking up to that through more, offices like Perch Wealth that are focused on this alternative sector. We're providing that education and we're showing them why it makes sense to them. I mean, you look at the basket of opportunities. Folks are over allocated on equities. They're over allocated on bonds. You don't want to be in bonds with interest rates. Stocks, I do not feel comfortable at all with. What do you do today? How else can you reduce volatility, reduce risk, and create that income stream that will help you go into or maintain retirement? And that's where the alternative investments can come into play.
Solid business model. What are the best funds to invest in? Does it differ for different clients?
Yes. Another great question. It's just like building a portfolio. And I'll just give you an example. Of course, I mean, if a client comes in today and they're not dependent upon the income at all, right? I'll just give that example. They're looking for, again, lower volatility. They want stable income. They want growth. They want inflation protection. I'm probably going to recommend sectors like, private multifamily funds. These are all private real estate investments. Potentially, assisted living. These may have slightly lower income streams, but more appreciation potential as, especially in an inflationary environment versus, a client that really is dependent upon the income. They want more income. So then, we'll go into and we can create a blend of these, but like a single tenant, triple net, private single tenant, triple net REIT portfolio, very diversified, investment quality, long-term leases. That is not going to perform as well as a multifamily in an inflationary environment, but it kicks off a lot more income. And at the end of the day, if income is what's important and your downside is protected, then that's what we want to provide. Now, of course, a smart thing would do, you slide some inflationary protection in there along with that higher income. So to your question, yes, every portfolio is slightly different based on the client's profile, but at the end of the day, they're all looking for the same thing, which is that stable, predictable, tax efficient income.
So you can create a blend that's really customized for the client, really rich educational conversation to help them make some good decisions for their family.
It's less transparent than what you'd find in the public space. I mean, we all know the large cap tech companies that we should be investing in or that most people are investing in, whether that's the FANG stocks or the up and coming tech names or maybe the staples that we see in our homes. Think of like a Coca-Cola or a Pfizer and whatnot. So there's so much information available in the public markets, and it's a very transparent market that's efficient. Now, with private investing, there's no liquid market on the day-to-day. So it's hard to kind of track what your investment is really worth and how it's been performing over time. So it's important to identify professionals, asset managers who have your best interests at heart, who have done this before, who communicate in a way that's consistent with your expectations. And there's a lot of people in the industry and a lot of noise. So it's important to find, who you trust, who has the right skill set in order to deliver results. And it's just much more of a fragmented market than the public space. So I think identifying professionals, diligencing them, doing your homework, those are all things that you need to do when you're evaluating public market investments, but it's even more important in the private space.
So due diligence and trust is the major factors to really thrive in private equity.
Yeah, at least as an investor when you're making decisions, right? And determining who to work with. So you kind of getting comfortable, reading the investment materials, asking the right questions, getting to meet the team, reviewing whatever collateral they might have. It might be videos, it might be blog posts, it might be an email newsletter, or a combination of all those things. Those are some things that we do at Legacy Group to communicate with our investors and potential investors. So really kind of diving deep into that collateral and making sure you understand it and asking questions and doing your homework. I think that's very important.
Very good. Many of our clients are using family offices, so it's really leaving it up to their team and then bringing forth those investment concepts or opportunities. What makes investing in assets in Latin America attractive? And what are the advantages of that?
Yeah, I think we're seeing a lot of instability right now at home here in the US. And most of our investors at Legacy Group and in our portfolio companies are heavily allocated towards US-based assets, whether that be their homes, investment properties, stocks, and bonds. Everyone's very concentrated here. They might have a sliver in emerging markets, but often that component of emerging markets tends to be Asia, right? Or more global, right? So what we have going on now, and, I mentioned kind of what's going on in the US, there's also some instability in the eastern part of the world in what we typically consider emerging markets out in Asia. So Latin America is getting more attractive in my eyes. I mean, you want to be in a growth market that's emerging, and we think LATAM is ripe for disruption. It's very close to home. Where we operate in Colombia through our portfolio companies. Colombia is the largest trading partner. Its largest international trading partner is the US. So there's great relationships there. And we're seeing a ton of capital flow into the region. And we've been what we like to consider early. We've been in the market there since 2017. But other players are entering the market, the likes of SoftBank, among others. They're writing big checks. They're investing in early stage companies in Latin America. And we think it's an area that will continue to grow for the years to come.
It's exciting. You're going to see that market thrive. It's going to create more employment. It's got a very good story, a lot of history there.
Oh, yeah.
You make a positive impact. How do you acquire that local knowledge?
So our management team, myself personally, I'm in Fort Lauderdale, Florida, where I head up investor relations, but the two partners at Legacy Group, they live and work out of Medellin, Colombia. So we're on the ground in the market where we operate. We've been there for over 5 years, as I mentioned. So on the ground, firsthand knowledge is really how you do it. And then in terms of getting people who have been there even longer, we hire a management team at our portfolio companies, our flagship portfolio company being Green Coffee Company. It's the second largest coffee producer in the country today. And what we've done is we brought in talent that has decades of experience. So the CEO of that company, Boris Woolner, he has 25 years of agricultural experience in Colombia. So we're on the ground and we hire talent that fills in the gaps that we need to fill in as well. So we do wholesale B2B unroasted coffee right now, and we're going more vertical in the years to come.
All right, so you got that whole growth in the coffee. Are you doing roasting or you're not roasting?
We do.
Okay.
We have it available on Amazon for purchase, more so for our investor base, and it's a great product. So I encourage you to check us out there. We can probably put a link here in the show notes for your listeners if anyone wants to try it. But the main model or the business model today is B2B, and we do containers of green coffee.
You mentioned the word containers. That helps us size the opportunity there. Okay. How do you develop that international expertise, and what makes you able to work across borders?
Yeah, well, we kind of alluded to that a bit in terms of the team and where they are. But in terms of international expertise, the founding partner, Cole Shepard, before moving to Medellin, he worked internationally for PricewaterhouseCoopers. So he was working in all over Asia, in Hong Kong, and other parts over there, also in Bermuda, here in this part of the world. So he's an international M&A expert, mergers and acquisitions, and he's taken that experience and he's applying it to our acquisition strategy at the Green Coffee Company. And then the other partner we have, Adam Jason at Legacy Group. He worked in the US as a securities attorney, had a full career as a corporate lawyer, representing multinational corporations and private and public equity and debt issuances. Myself, on the investor side, I've worked with domestic and international investors in a variety of different products in my career. So all of us have international experience. And then at the portfolio company level, we hire in real local knowledge and expertise to operate the business on the day-to-day on behalf of our investor base.
Thank you for sharing that. Why is it so important to be sure social and environmental impact are part of your investments?
Yeah, this is something that really resonates with me and with our investor base. It's part of our ethos at Legacy Group and what we do through Green Coffee Company and our other investments. One, taking care of people in the communities in which you operate, it makes you feel better at night when about your investments, right? So you could do right and make money at the same time. They're not independent of one another. So making yourself feel good about what you're doing from an investment perspective is one. And then also markets reward companies that are innovative around ESG. So if you're providing a lasting impact, when you go to sell the business or you go to IPO it, which is what our preferred strategy is for Green Coffee Company, markets will reward the activities that you're doing on the sustainability side of things. So when it comes to social impact, we're the largest employer in the town in which we operate in Colombia, Salgar. It's about 3 hours outside of Medellin. We're providing equal and fair employment. We pay above average wages. We pay people into bank accounts instead of cash, so they're able to build credit and really become lifted up in society. And you see it when you go out there. I was out at the farms last week, and the passion that the employees have on the day-to-day, it's just incredible seeing it in person. Then on the environmental side, global warming is real. Anyone that tells you otherwise probably doesn't work in the agricultural business, I would say. And we're doing things on the environmental component when it comes to our planning practices, reducing waste and finding usages for byproduct, reducing water. We're doing a lot in that space. We have an entire presentation on sustainability and impact separate from our usual investor presentation that we have.
Is it online or it's something somebody would ask for?
They could request it from us.
Okay.
So
we'll get into your contact information a little later. Thank you for that.
Yeah, you're welcome.
So you can get very, very passive. An example of that might be if I'm a private lender, right? If I do seller financing where I collect an interest payment, much like a bank would do on a mortgage, there's still going to be some level of oversight. I still need to check on things. I still need to look at statements. So I think that's one of the pitfalls is I think a lot of times we aren't quite sure what's meant by passive, and we think everyone means the same thing when they say that word. And so for me, I realized not everyone has the same definition of that. That's part of it. And then the other part of it too is, when we're looking at getting income that is passive, we have to look at the reason why. And I think when I look at it personally, it's a freedom thing. I don't want to have the obligation of trading time for money. Time for me represents action. It represents freedom. It represents ability. And so when I trade those things for money, I can't ever get those things back. I can get the money back. I can recreate it and reproduce it. So, I think a lot of times when people look at passive income, it's the dream of I want to retire and I want to be, I want to travel and go on the beach and et cetera. That's all great. But a lot of times that happens and we get bored and there's got to be another thing after. I live in Florida now. You can only go to the beach so many times. You see it and you're like, I know what sand and water looks like now. And so that's a pitfall. And then finally, I think, the other one is people getting involved in things that they think are passive and are not passive. And an example of this would be managing a rental property. That's a $400 a month part-time job, really. It's not that passive. And so I have to look at this and really, understand, again, what does passive mean? What is my purpose? What am I going to do with my time instead? And are these investments I'm getting into, truly helping me get there? And then realize I do still need to be active. The people that I know that have the most passive income, they're active with it. They look at it, they inspect it, they make sure things are okay. The income being classified as passive doesn't mean that I never inspect.
Yep, we find some of our fund investors and our listeners, they'll own 125 properties. And when you're looking at the property management, it'll reduce some of the burden, but again, they still need to meet with those individuals and walk the property with whoever's going to manage the property to make sure it meets their criteria, and the upgrades that are going to take place and the additional rent that's going to be forthcoming as you make those improvements to the property. So we're also heading into what looks to be a recession. We're in October of 2022. So we're going to move into some questions to try to help our listeners. Can you talk about private and alternative investments and leveraging opportunities that you recommend to your high net worth clients?
Yes. So one of my favorite things that I do personally is seller finance real estate. And this is typically with lower end homes. So a lot of times when I do this, it's going to be, I have a group that I go through for this, but we look at bank foreclosure lists. We're getting properties that are already at the bottom dollar, right? We're already getting a great deal on them. In that same stride, that does kind of make it recession proof. A $30,000 foreclosure home, there's not that much room for it to go down further, right? So we're able to kind of lock in a downside protection there. The reason I like this is because with seller finance, you're buying at one price, you're putting on market at another price. I might buy a home for $40,000. I might list it for, let's say, $60,000 or $70,000. The interest that I'm charging to that family that lives there is going to be based on the $70,000, not the $40,000. Right. So I'm getting a yield as if I had put $70,000 into an investment when really I only put in $40,000 of my own principal. So I get an instant equity gain. I get a very high cap rate because of that. And then I also do get a real asset that does give me some downside protection. And it's, for me, that is one of the more passive forms of income. I'm not, if they break the toilet, I'm the mortgage. They've got to fix it. It's not something that goes back to my property management team or anything of that nature. So that's one that I like quite a bit. I'm also a very big fan of life settlement investing. Warren Buffett and Bill Gates are actually two of the bigger players in this space. It's usually more institutional, but we're seeing more and more opportunities with private equity funds and buying direct for the individual investor to start doing these. But this is great because it doesn't have any sort of correlation with markets, with the economy. It's based on an individual's lifespan. And so I can get a great internal rate of return. It's kind of insulated from some of these other factors. And I can really underwrite out the risk of going with an insurance company that's not solvent or isn't going to pay or might have exclusions. So that's another one that I like in my portfolio as well.
What do our listeners need to look at, or should they work through your fine organization for those type of opportunities? Because you'll do some of the due diligence that needs to be done.
So on the seller finance, my company can definitely help with that. We've partnered with a company called Equity and Help. You can check out their website. They're a great organization. They have a very strong team and they specialize in doing that seller finance market. What I like about their system is they buy the properties, they prehab them. So by the time I'm investing with it, minimum essential repairs are already done. And then they also put the family in it and manage the family and the relationship for me. So it's a very passive source with that. So that's a great one. And again, you can check out their site. We can also help out with that. On the life settlement, this one is really, you've got to find a good fund for it. So there are funds out there, not one that I particularly offer, but if you're interested in learning about it, Cliff, you might have some connections with that too in the life settlement space.
There's a whole life policy, could be a term policy that's sitting there or a variable annuity, and now it's got value and you're accelerating the payments early and there's a discount that's actually going to be earned by the investor. And then when that individual passes on at that point, you'll get your principal plus the upside, the differential between what you paid the individual for that policy. And I was really, really happy to hear that you said the solvency of the organization, meaning the underwriter, which is the insurance company, how strong are they to be able to weather what's taking place? And another resource for our listeners would be Weiss. Weiss's financial organization will rate these financial institutions. It could be a bank, insurance company, individual portfolios, ETFs. So just the idea that they're not taking any money from any of the rating companies and they're doing the independent audit. So you can trust what's coming out of that organization. So they will be aggressive on their marketing. So I'm warning my listeners at this point, if you get on their email list, they're a little aggressive, but the material or the knowledge that's coming out of there is quality. Tell us, are there any assets that are more recession-proof than others?
There can be. For me, when I look at recession, typically speaking with assets, it's when value starts to meet with price, or maybe we want to say it the other way down, price starts to meet with value. So when we're in an overvalued market, that separation comes up much higher and you see a high price. The intrinsic value might not match that price. And for a period of time, people are willing to pay that. Once that comes down, the question becomes, what is the actual value? Right. And so, when I look at things, I do like to pay bottom dollar. When I buy gold and silver, I buy it wholesale, right? I want to cut out as much of that separation between price and value as I possibly can. When I do private lending and seller finance, that's another one where I'm going to look at, okay, I'm paying a wholesale price for the homes, even with the life settlement. So, the two that I kind of do stick with, even in a recession proof, and I mentioned this already, is the seller finance. That one is for me a very strong option. And also, the life settlements, gold and silver, and not so much of an investment, more of a store of value. Right? But that's another one where I do know I have an asset and I do hold an asset. And then I'm big on high early cash value whole life insurance as well. And that's also more of a savings tool than an investment, but that's a good place to store, because during a recession, we want to wait till it does get to the bottom. We do want to have some dry powder to go out and start making some acquisitions. And so it's a question of putting it somewhere that's going to give us, protection, liquidity, growth, and the ability to go use it when the time comes.
So your suggestion is, with the whole life, they can actually borrow on the policy at that point, and that's a tax-free, as you return those assets back to paying back that loan at this point.
Yeah, absolutely. Now, I do want to warn people, it does need to be structured very specifically. So if you go and talk to a whole life guy and say, hey, I want to go buy whole life insurance, he's going to rub his hands together and be very excited.
Worried about that.
So you want to look at a good way to model it is if you model it after bank-owned life insurance or corporate-owned life insurance. It's ultra high liquidity. An example of this would be if I were to put in $100,000, the very first day I can go borrow, 95% of that. And that 100,000 will keep growing. No different than a home equity line of credit. The house can still appreciate even though I've taken a loan against the asset. So there is this particular structure for that.
How can our listeners make investments more tax efficient?
So this is planning, right? There are going to be investments that have tax advantages in and of themselves. An example of that being rental real estate. But the biggest thing that I see happen, when I talk to investors, is the taxes are an afterthought. They buy an asset and then they're like, this is great. It goes up in value, and then they sell it. And then they come to me and they're like, Jerry, I just sold this asset. I have a capital gain. I need to mitigate it. I'm like, great. Well, we should have talked about this 6 months ago, right? This is something that we can plan for now, but it's now slim pickings. It's more of an emergency. So I would say, being tax efficient with your investments does come down to proactive and strategic tax planning. And that's more of a matter of having the right tax team and having the right schedule with it too, right? So a lot of times we think tax season, which is, when we file, but that's tax filing season. Tax planning season, really, we're kind of in the thick of it now. Towards the end of the year, we should be looking at these things and making plans for the current year, but also making plans for the coming year with taxes. So there's great things you can do with, using charitable trusts. You can use self-directed pensions, self-directed retirement plans. You can do things like oil and gas drilling if you've got a good fund for that as well. There's tons of different tricks up the sleeve. It just comes down to, what am I trying to accomplish and what makes sense at this time.
So you're really suggesting to our listeners, we really need to plan 3 years out, 5 years out, and put a strategic plan in place. And then you get to, on an annual basis, you're updating the plan, but you've got a sound strategic, let's just call it a financial plan in place. So there's no surprises and there's less stress.
Right. And on that note, Cliff, what I've realized too, as I've done more and more with tax planning, is sometimes the CPA isn't the tax planning. Like people have that misconception, like, oh, I have a CPA, and it's like, well, that's an accountant. And so they might do tax planning. More times than not, they're going to do filing and they might do some accountancy stuff. But, for a tax planning, you really do need to have someone that specializes in that actual system of the Internal Revenue Code and what's out there. And oftentimes that's going to be in addition to maybe the person that does the filing and the record keeping.
So accounting will have the financial side and the consultative side. And you're looking at the expert that's on the consultative side that really understands the rules and regs and be compliant. And you can still have the benefits, but it needs that planning and the time to be able to execute. So you don't have the stress of trying to mitigate something that you just made a decision on. No, plan and execute.
Yeah, and on that note, I had a guy, this was 2 weeks ago. He sold his company for about 15 million.
Okay.
He sold it in March. And so he comes to me now and it's like, okay, good. I need to mitigate my capital gains. And the first thing I thought was, okay, we could do a qualified opportunity zone fund, right? We can put that into the fund. At this point in time, he's got 2 weeks left because you've got 6 months to put that money into the fund, and it's been 5.5. So, these are the kind of things that we don't know till we know. And that's why it's so important to, have these conversations and have this kind of material out there, because someone like that might hear this line and be like, okay, good, I'm selling now. I need to get things in order before it happens.
At the pre-planning, very, very important.
Yeah.
Is there anything I haven't touched on that you would like to add?
I think on the legacy planning side, we really talked about, passing funds along. Before we started the show today, we'd mentioned, kind of the younger audience. And I want to make sure we hit them because I am a younger guy and I'm a little bit of a unicorn in the sense that I'm doing well financially at the age I am. And so I can kind of relate to both sides. I think like an old person, but I look and act like a young person. So, especially for those that do have kids, they've got grandkids, making sure that the education is there, making sure that, things are set up where the legacy can be carried on. If we've got a trust and we want things to last generationally, the assets aren't the only things we want to pass down, right? The schools aren't doing it for us. The universities aren't doing it for us. And somebody that has built significant net worth, who better than that individual to teach their own kids and grandkids, here's how I did it, right? So I think those are good conversations to have, even in your family estate plan. If you do a little write-up of, here's what you should know, here's the basic tenets and principles and things that should be put in place with managing assets and building wealth and earning income and reducing taxes and, all those great things. And I think that's a great way to go about it and a good system to start with.
Today, we have video assets. So the idea of using your phone and talking into the phone and sharing your wisdom and how you got started in the life of the family and what you remember from your father and your grandfather and sharing that with the next gen is a very rich, dynamic conversation that it's part of your legacy. It doesn't take a lot of effort, but, once you're gone at that point, there's a vacuum of knowledge and people are making assumptions versus you articulating, this is what took place in my life. These are my feelings. This is the education I received. This is how we have the wealth. How do you want to look at philanthropy, building other businesses, employing, coworkers, team members. The success is not an accident. Somebody planned and executed. And I think that story, articulating it, is the most important part. Share your wisdom, with the next gen.